Good morning, friends. Important video on 53rd GST Council meeting held on 22nd June 2024. I'm going to discuss 30 important recommendations, one after another. Let me start with the document which I'm sharing with the screen. First important recommendation, waiver of interest and penalty. For all demand notices issued for non-payment or short payment of taxes or wrongly availed credit or utilized credit, except erroneous refund. Issued under Section 73 non-fraud case for financial year 17-18, 18-19, and 19-20. Only condition that such demand must be paid by 31st March 2025. Here, one important observation. We have seen the advantage which is going to the non-compliant taxpayer versus compliant taxpayer. Irony, 7 years of GST, but this is what it is coming out. But this recommendation going to help those who are non-compliant. They are having so-called notices for 17-18, 18-19, and 19-20. And if they have not paid the liability, they can pay the liability by 31st March 2025. Complete waiver of interest and penalty. Section 73 is being considered here. Coming to the second point. Second point is time limit to avail credit in GST. As a provision, we know it is earliest of due date of furnishing return under Section 39 for the month of September following the end of relevant financial year, or due date of furnishing annual return. We have seen that in initial years of GST implementation, we have missed availing credit in time-bound manner. Hence, these credit which is not being availed within time in GSTR 3B is being disputed by the department, and a lot of litigation going on. With the judgment about constitutional validity has come from different high court, but taxpayer was demanding that GST Council must consider this point. And we have filed the SLP in the Supreme Court also. Notices being issued and counter was supposed to be submitted. But now with this amnesty scheme, which is given on time limit to avail credit, it will give advantage to lot of taxpayer. What is being stated in this recommendation? That for the financial year 17-18, 18-19, 19-20, and 20-21, 4 years, initial 4 years, time limit is now going to be 30th November 2021. 30th November 2021, and only condition you must have availed in your GSTR 3B. This is what it is talking about. So good one, but here one observation. What happened to those taxpayers who might not have availed in 3B, or they have filed their 3B with nil amount, but avail the same in books of accounts and or they have shown in 9 and 9C. So are they getting benefit? As per recommendation, those who have availed in 3B up to 30th November 2021 for these 4 initial financial year, they will get the advantage and credit would be made available to them. And this provision going to be inserted in section 16, subsection 4. That is what the first point coming out. Second point, for the cancelled dealer in GST regime, a conditional relaxation is being provided. Those whose registration get cancelled and they are not able to file their return, so they may have a challenge कि उन्हें credit avail नहीं कर पाए within time because कि return नहीं भर पाए. They could not submit the return 3B. So there may be a chances that their time limit has got expired. So this is a benefit given to such cancelled dealer if they are filing their return within 30 days for the period when they could not submit their return. So what is the time period prescribed? 30 days they must file their return, and this should be from the date of cancellation of their registration till date of revocation. So within 30 days from the revocation order, they must file return 3B for the period starting from date of cancellation of order till date of revocation of cancellation of registration order. Second one. Third one pertaining to reverse charge. You know, there are certain notified goods or services which is subject to RCM liability, and recipient need to discharge the GST liability. The question was, what happened for such reverse charge liability pertaining to prior period, let's say 17-18, 18-19, 19-20. Now you're realizing that you were supposed to pay reverse charge liability, which you did not pay. If you are paying this liability now, can you avail credit? And whether this credit is going to satisfy the condition of section 16, subsection 4, time limit to avail credit. And whenever you are procuring from unregistered supplier, we have made several videos in the past, which is there on my YouTube channel, which you can go and watch. We have communicated in the past and again repeating. What is the document for availing credit for this kind of reverse charge liability? When you're procuring from unregistered supplier, self-invoice generated by you as a recipient under section 31, subsection 3, clause F of CGST Act. And that is eligible document. And in terms of Rule 36, Sub-Rule 1, Clause B, it is being stated you can avail credit of such reverse charge liability paid and self-invoice generated in the financial year. Listen very carefully. In the financial year when you are generating the self-invoice, that would be the relevant financial year to see the criteria of time limit under section 16, subsection 4 to avail the credit. Yani agar 17-18, 18-19, 19-20, for an example, reverse charge की liability थी, जो आपने unregistered supplier से ली, और आप current financial year में pay कर रहे हैं, तो current financial year को relevant year consider किया जाएगा. To look at the criteria of time limit to avail credit under section 16, subsection 4. This is what being stated, but you must keep to your mind two important points. First, reverse charge liability for the past financial year must have arisen because of time of supply provision. Like when you look at reverse charge for services, time of supply would be earliest of two. So either the date of payment by the recipient or date following the end of 60 days from date of invoice. So that time of supply must have arisen for the past financial year. So for you, you will get the credit when you're raising self-invoice in current financial year, no problem. But your time of supply must have arisen. So you need to pay along with interest. And you know that reverse charge liability to be paid in cash, of which corresponding credit would be available on the basis of self-invoice generated in the relevant financial year. And that will satisfy section 16, subsection 4. This is what it is being calculated. Interest going to be levied for past financial year, and that to be paid in cash. An interest rate is 18% per annum, of which you will not get the credit. So these are the two factors you must keep to your mind. So this is the second point. Coming to the third recommendation. Council has recommended the monetary limit for filing appeal by the Revenue Department. So this limit is going to be applicable for filing appeal by Revenue Department. If it is up to 20 lakh, in GST Appellate Tribunal, GST 80, department will not file appeal. If it is 1 crore up to High Court and 2 crore for Supreme Court. This is what the monetary limit they have fixed for themselves not to file appeal in respective appellate forum. So this is limit applicable for the Revenue Department, not for the taxpayer. So taxpayer is having any grievances, they have their right to appeal, which is available irrespective of any amount, subject to section 112, subsection 2 of CGST Act. Here it is being stated that GST 80 at its discretion refused to admit any appeal of tax amount, ITC, fine or penalty if it does not exceed 50,000 rupees. So this is the relevant point. I thought, let me draw your attention. Coming back to recommendation number 4. Quantum of pre-deposit required to be paid for filing appeal under GST. You know that when you're filing appeal before first appellate authority, what you need to do? You need to first pay up your admitted tax liability with interest, penalty, fees or fine, whatever it might be. You must pay up your admitted liability. And then 10% of disputed tax, only disputed tax, need to be paid as a pre-deposit, subject to maximum of 50 crore, 25 CGST, 25 SGST. This is not the present provision. Now they are saying it is going to be reduced. Reduced to what? It will continue to be 10% of disputed tax, subject to maximum of 40 crore, 20 CGST, 20 SGST. This is the proposed recommendation. When we are supposed to file appeal before appellate tribunal, then the present provision is we have to pay up all admitted liability plus 20% plus, so 10% before first appellate authority. Now 20% additional of disputed tax need to be deposited, subject to maximum of 100 crore, 50 crore CGST, 50 crore SGST. Now what is the recommendation? They are saying this 20% of disputed tax liability now going to be reduced to 10%. So it is going to be 10% of disputed tax, subject to maximum of 40 crore. So 20 crore CGST and 20 crore SGST. This is the change, reduction in the quantum of pre-deposit required for filing appeal under GST. But here, my observation, still this is high. 10% at the first appellate authority, 20% before tribunal, which is now reduced to 10%, so total 20% subject to maximum of 40 crore before first appellate and tribunal. It is still high comparing pre-GST. It was only 7.5% of disputed tax in pre-GST era and before first appellate authority, and additionally 2.5% totaling together 10%. So additional 2.5% when you are going for tribunal. So subject to maximum of 10 crore. This was more reasonable and trade was demanding at par level. Reduction is being recommended, but still expected to further reduce. This is what the trade was demanding. Again, this may be considered, and again, a submission to the GST Council to consider this request and representation of trade, industry, and commerce. Having said that, now coming to the fifth recommendation. What is the fifth recommendation? That you must know that our Honorable President of GST 80 got appointed on 6th of May 2024. And as per the provision, 3 months we need to file appeal before GST 80. Tribunal में 3 महीने में हमें appeal file करनी है from the date of his appointment. So which is going to be 6th of August 24. It was just coming nearer to the end, whereas still we are in the midst of formation of GST 80. So Council had considered this point and made recommendation that they are going to notify 3 months time period for filing appeal before GST 80 appellate tribunal from a date to be notified. So rest assured, your time period would be available to you. They will notify, and from that date, 3 months going to be calculated. Item number 6. Now, this is very interesting one that we have seen in the past, that you may have deposited some amount in your e-cash ledger and you could not file 3B for number of reasons, but balance is lying in your e-cash ledger. That may be full amount, that may be part amount, whatever might be. And when you were filing your 3B after some time period, department was demanding interest even on this portion of amount which is lying in your e-cash ledger. It was not appropriated because you could not file your 3B for some either or region. But they were demanding interest on that portion which was lying in your e-cash ledger. And as a taxpayer, I was saying, sir, mera balance e-cash ledger में पड़ा हुआ है. हाँ, मैं 3B नहीं भर पाया. पर आप उसके ऊपर तो interest मत मांगो. So this is what the important recommendation, which is welcome recommendation. Now, they are going to amend Rule 88B and stating that if you have deposited some amount in your e-cash ledger and it is lying in your e-cash ledger on due date of furnishing the GST return 3B, it is lying there on due date, and subsequently you are filing your 3B, then on this portion, on this amount which is lying in your e-cash ledger, interest is not going to be leviable. So this is very much welcome recommendation, but again the point will come. What happened for the past period? When a lot many taxpayer might have paid the interest on this balance because department was disputing, right? And one of the case has gone before Madras High Court ISIS Motors Limited, where Honorable Madras High Court has held no interest on amount lying in e-cash ledger on the due date of furnishing that 3B. That is what the decision given by Madras High Court ISIS Motor, and I prepared one video which is there on my YouTube channel, which you can watch. But now, since this recommendation is being made, Rule 88B going to be corrected and amended. Only thing for the past period, those who have paid the interest, which was not supposed to be, what is relief to them? That is the point number 6 recommendation. Coming to the 7th recommendation, that there would be sunset clause for anti-profiteering cases, and that sunset clause would be April 1, 2025. Now, after this, all these cases will go to the principal bench of GST Appellate Tribunal as against CCI, Competition Commission of India. So this is what the sunset clause. Coming to the point number 8, that you must be knowing when import is being made by SEZ unit or developer in SEZ, they are being exempted from duties and taxes. But what happened? Compensation cess is going to be leviable. This was disputed, but important recommendation. When duties and taxes are exempted on import by SEZ unit or developer in SEZ unit for their authorized operation, then quite obvious, compensation cess will also be exempted. Welcome recommendation, and that too retrospective July 1, 2017. Now, the problem which again I foresee what happened for the past period when dispute was there, litigation was there, but otherwise it's a welcome recommendation. Coming back to the point number 9, important recommendation. We have seen that GST Council over a period of time issue a clarification by way of circular. As is basis. So sometimes there's a rate dispute, sometimes dispute on exemption, sometimes dispute on classification. So we have seen the past 7 years that the GST Council considered and issued a circular as is basis, meaning thereby, let's say that you have seen a number of such, circular that some item, let's say you're charging 12%, whereas department perceive it as 18% leviable. Let's assume for understanding's sake. So there is a short payment of 6%, right? This is one case. Another case could be you are thinking it is exempted, but department saying, no, it is taxable 5%. So it's a pure case of non-payment. So non-payment and short payment. Let's say GST Council decide on some date, and which we have seen in the past, and they decide as is basis, meaning thereby you have seen such circular, they're saying that, okay, from this cutoff date, now this is going to be either taxable, so 5% you must pay, or it is 18%, so you must pay 18%. But what about that 6% differential or 5% which was not paid because you treated as exempted, as is where is basis? So they give relief to the taxpayer that it will not be chargeable to you for non-payment and short payment. but it was not having any legal backing. Now section 11A going to be inserted, granting power not to recover duties, taxes, either not levied or short levied. So such circular, which is being issued on as is basis, going to have legal backing. And here one point, whenever we see such circular, such clarity, such recommendation, what we have seen, of course, those who have not paid or short paid, they get the relief. What about those who have paid? And they might have paid the liability, they come with a disclaimer, caveat. Those who have paid, they will not be able to get any refund out of it. So this is the, again, open point. And again, I'm discussing in the context of compliant taxpayer versus non-compliant taxpayer. But I really want at par treatment to the both the categories. If from a cutoff date it is being decided, then this would be applicable to all. And for the past, those who have paid the taxes, they must be refunded back. That is my humble submission. Of course, you can write back in comment box with your input, suggestion, and that might help for understanding of all the viewers who are watching this particular presentation and video through a webinar mode. Thank you very much. Coming back to the point number 10. Now, what they are saying and what is the context of this point number 10 is you have exported, let's say $100, and you have charged 18% IGST and got the refund of 18% also. But for some reason, if there's a revision in your export price, it is made $120. So $20 made extra. So you need to pay again IGST on $20. When you pay, then there would be question of getting refund also, right? That is what it is being permitted in this recommendation. So point number 10, that you will get refund of additional IGST paid on account of upward revision in price of goods subsequent to export. Come to the recommendation number 11. And interestingly, what it is saying, they're going to clarify the valuation for supply of import of services by a related person, domestic party, when recipient is eligible to full input tax credit, full ITC. So what it is saying that where foreign affiliate is providing certain services to the related domestic entity for which full ITC is available to that related domestic entity, then value of such supply of service declared in the invoice by said related domestic entity may be deemed as open market value. So no dispute, because recipient is entitled for full ITC, right? This is the point number 1, and it is as per Rule 28, sub Rule 1 of CGST rules. What happens if invoice is not issued? Past period. There might be case that on revenue neutrality, that you will pay and then you will avail credit because recipient is entitled for full ITC. There may be a case and you have not paid and no invoice is being issued by that related domestic entity. Then what would be the valuation? Can it be demanded? Can it be on any price, any value, or can it be nil? Now rescue clarification going to be issued, and they are saying in that case the value of such supply may be deemed to be declared as nil, revenue neutrality, and may be deemed as open market value in terms of second proviso to Rule 28, sub Rule 1. Come back to the item number 12, corporate guarantee. We know this corporate guarantee is such a disputed item. A lot of litigation has started and going on with a corporate guarantee per se, supply of corporate guarantee given by related parties with a GST leviable. First point. Second point, if it is leviable, what would be the valuation, right? Rule 28, sub-rule 2, newly inserted from 26th of October 23. And the valuation saying it would be higher of 1% of guarantee amount or the actual amount whichever is being paid. And this is a new rule got inserted from 26th October 2023. Still on taxability, nothing is being taken back. As per GST Council, they are saying it will continue to be taxable, but point of litigation, whether this giving guarantee per se is supply of service between related parties. There's nothing like services being provided among related parties because this guarantee given, corporate guarantee given to the financial institution and bank through whom loan is being taken by related party. So this is on taxability to remain. Only on valuation, they are saying they are going to issue a clarification. What clarification? That if it is export of services, so domestic related party giving guarantee for loan taken by foreign party, foreign affiliate, foreign related party. It is export of services, but there is no consideration, right? No consideration. So what would be the valuation? And when the recipient is entitled for full ITC, what would be the valuation? So there are 2 points which is being recommended by GST Council that for export of services, they will clarify. And where recipient is entitled for full ITC, that may be within India transaction. You can always consider. So within India, 2 related parties, 1 company giving a guarantee for a loan taken by another company under same management, same group, and recipient is entitled for full ITC. What would be the valuation? Is it 1% or 1% of guarantee amount or actual amount, whichever is higher, or something lesser? This they are going to clarify. So we have to wait and watch by way of circular. Coming back to the 13, ENA, taxability on ENA. So this issue, extra neutral alcohol, when it is being used for manufacturing of alcoholic liquor for human consumption. Dispute litigation whether GST leviable or not leviable. For simple reason, alcoholic liquor for human consumption is out of GST. And on ENA, there was dispute of litigation, taxability on ENA, which is being used for manufacture of alcoholic liquor for human consumption. They are now recommending ENA would be out of GST. No GST on ENA, which is being used for manufacture of alcoholic liquor for human consumption. And that too with retrospective date. So laudable, welcome move. Coming back to point number 14, reduction of rate of TCS to be collected by e-commerce operator for supplies made through them. It is 1%, right? 0.5% CGST, 0.5% SGST, or 1% IGST, 1%. It is going to be reduced to 0.5%. So 0.25 CGST, 0.25 SGST, and for IGST, 0.5%. So this TCS rate going to be reduced, which will ease financial burden on the supplier, because this TCS, which is being collected by e-commerce operator, either gets accumulated at the end of supplier and they're the financial burden, so it will get reduced on the basis of representation submitted. So welcome move. Item number 15, transitional credit. 7 years of GST, right? Still transitional credit related issues are cropping up. And this is another matter of litigation in different high court for input service distributor. So council is now going to amend, they're saying amend, in section 140 subsection 7 of CGST Act, that to retrospectively from July 1, 2017 to provide for transitional credit, or for what? In respect of invoices pertaining to services provided before appointed date, July 1, 2017, and where invoices were received by ISD input service distributor before appointed date, July 1, 2017. So they're going to amend section 140 subsection 7 with retrospective date July 1, 2017 for transitional credit for invoices pertaining to services prior to July 1, 2017 and received by ISD prior to July 1, 2017. So they are going to amend section 140 subsection 7, which is a matter of dispute in different high court pertaining to ISD. Coming back to the new optional facility, and you must be hearing GSTR 1A, right? What is this GSTR 1A? When you're filing a GSTR 1 on 11th of next month or through invoice furnishing facility by 13th, and sometime you have seen and feel challenges that you may have made mistake, or you have forgotten to add some transaction of your outward supply. So you can't revise your GSTR 1. And because of this, this figure auto flowing for outward tax liability from 1 to 3B. So you're not being able to reconcile. So you are finding challenges. Now challenge going to be resolved. They're giving you GSTR 1A. After filing 1 or after furnishing invoice to invoice furnishing facility, if you feel like something you have missed including in your GSTR 1 or you have made mistake, then you can amend in GSTR 1A so that it can be corrected and a correct figure can flow to your GSTR 3B pertaining to your outward supply liability. But only thing you need to ensure, this GSTR 1A must be filed before filing GSTR 3B. This is what, and that is for the current tax period. That's what it is being referred. So hope this part is again clear to all of you. Item number 17, recommendation. Exemption for the taxpayer for filing annual return 9 and 9A for the financial year 23-24. Those whose aggregate turnover up to 2 crore rupees, similar like past years. Otherwise, due date for furnishing annual return is 31st December 24, pertaining to 23-24. Come back. Another provision, that recommendation by GST Council, and there would be amendment in section 122 subsection 1B, and that too with retrospective date 1st October 23. The panel provision, which is applicable to e-commerce operator. So only amendment going to be, it is going to be applicable only for such e-commerce operator. These panel provision going to be applicable only for such e-commerce operator who are required to collect TCS under section 52 and not for other e-commerce operator. And that may be falling under section 9 subsection 5 of CGST Act as a deemed supplier. So only applicable for those e-commerce operator who are liable to collect TCS under section 52. Point number 19. And again, interesting one. Sometime you pay up the liability through DRC 03 and matter goes for litigation. When it goes for litigation, then you need to file appeal, right? Before first appellate authority or GST 80 tribunal. So we as a taxpayer always argue that we have deposited some amount. Why DRC 03 should be considered as a pre-deposit for filing appeal. And we have seen that it was disputed one. Now the recommendation and there would be amendment pertaining to that in Rule 142. Whatever you have deposited by DRC 03 would be considered towards pre-deposit for filing appeal in GST. Welcome move. Now this point number 20, I do not know how many of you have heard, but it is going to have wide ramification. I'm telling you, wide ramification. They are going to insert section 74A in CGST Act to provide a common timeline, common time limit for issuance of demand notice and order under section 73 non-fraud, section 74 for fraud cases. What is the present limit? Non-fraud case, 3 years from the due date of furnishing annual return, and so-cause notice at least 3 months before. What is time limit for fraud case 74? 5 years from due date of furnishing annual return, or 5 years from the due date of furnishing annual return, and for so-cause notice, it is at least 6 months before. This is the present time limit. Now they are saying they are going to have common timeline for both the section 73 and 74. Why section 74A? For issuance of so-cause notice and order starting from financial year 24-25 and onwards. So there are going to be common time limit. So my assumption, it is going to be, of course, part of finance bill, going to be presented budget on July 1, 2024. We have seen all last 5, 6, 7 years, whenever budget comes, government says that these are budget pertaining to custom and excise, nothing for GST. But we have seen many changes comes in finance bill pertaining to GST, which of course gets notified as the way it is being proposed in the finance bill. This year, many changes you will find, and these are just because these changes are going to be presented in finance bill and going to become the part of the act already recommended by GST Council. So you will see, but what is going to be that common time limit? Non-fraud case, 3 years, right? Fraud case, 5 years. Are they going to make 5 years or going to make 3 years? Wait and watch. Going to be more interesting. So I'm giving food for thought. You must have understood it. Wait for July 1. Many things which we are going to do together. So this is point number 20. Coming to point number 21. Anti-profiteering I've done. Sunset clause, 1st April 25 will go to the principal bench of GST Appellate Tribunal. Now, this point number 22. Whenever goods are exported and that are subject to export duty, then we know there is no refund mechanism of ITC, input tax credit on export of such goods subject to export duty. Now they are clarifying whether such goods subject to export duty, neither you will get IGST option nor you will get refund of ITC option. So both are going to be done away with. So curtailment of refund of IGST in case where export duty it's payable, because without payment was already curtailed. Now for IGST they're saying it is being curtailed. This is what recommendation number 22. 23. B2C transaction reported invoice wage in GSTR 1 table 5. And the threshold was 2.5 lakh rupees, which is now going to be reduced to 1 lakh rupees. 24. GSTR 7 TDS deductor. They are saying it is going to be now compulsory. Even though it is nil, you have not deducted any TDS in particular month, still you have to file your nil GSTR 7 by TDS deductor under section 51 of CGST Act. Whenever you are filing your nil GSTR 7, no late fees. That is what the recommendation all about. Item number 25, success of biometric-based Aadhaar authentication as a pilot project in Gujarat and Puducherry. So they are going to introduce pan-India in a phased manner. Of course, to done away those taxpayer, unscrupulous taxpayer, fake invoice, fake credit, fake supplier, they will be going out from the supply chain. Welcome move. The changes in GST rate recommended for certain goods and services. Of course, notification going to be issued. It is not applicable as immediate. Notification going to be issued from a date to be notified. So you have to wait and watch for such notification. For that recommendation made for change in rates for goods or services. So this is item number 26. Item number 27. There's certain exemption and recommendation of exemption on certain services provided by Indian Railways to common man. Your platform ticket, your waiting room, luggage room, also intra-railway supplies. So they're saying it is going to be exempted. Recommendation of GST rate, so that to provide clarity, 12% on milk can, irrespective of fact, made of steel, iron, aluminum, carton boxes and cases of both corrugated and non-corrugated, 12% and 18% dispute going to be done away with. So this is what the next clarity. Solar cookers with single or dual energy source. Sprinklers, including fire water sprinklers, 12% GST rate. Item number 29. Accommodation services given by hostel facility. And here it is being stated that hostel within education institution are already exempted because education per se is exempted. That is what being stated by Honorable FM in the press conference. But still we have seen dispute. Okay, so exempted. That was not chargeable to GST. You can pick such clip and quote to the officer whenever you get such dispute. But what happened hostel and PG outside the education institution? And that is being used for stay accommodation services of working professional or student. Exemption now, clarity now, that there would be exemption for such accommodation services and value would be up to 20,000 rupees per month per person. Subject to a condition, there would be minimum continuous stay of 90 days. Minimum continuous period of stay is 90 days. So this is what, and this benefit going to be extended for the past period. Past period. So welcome move. Coming back to the last pointer. I've said I'm going to present 30 important pointers, 30. They're saying they're going to issue a clarification to provide clarity to the trade and the tax officer wisely said, because this clarity needed by both of us together. Sometimes we are clear, taxpayers are clear, tax officers are disputing. Sometimes tax officers are clear, taxpayer is disputing. At least it is applicable to both of us. And they're going to issue a circular. So you have to remain in touch. You have to be on my YouTube. You have to watching all this, webinar and presentation and video. As and when circular issued, we will again come out with the more clarity. What circular talking about and what are the pointers they are considering for issuing clarification by way of circular. Among these pointers, the first one, they are going to issue a clarification for taxability on securities and shares given as a ESOP, RSU, ESPP by a company to its employees. They're going to issue a clarification on warranty and extended warranty provided by manufacturer to the end customer. For warranty, they have issued clarification on 17 July 2023. But now extended warranty, again the disputed one, they're going to issue a clarification for that. They're going to issue a clarification on time of supply or annuity payment under HAME project. And we have seen the kind of litigation which is going on in number of cases which we are handling. As per department, that your POT, point of taxation, has arisen on COD date, whereas the milestone is defined in such contract and which may spread over 10 years or 15 over 10 years or 15 years over. I say it because T20 World Cup is going on, it is coming out. So it is 10 years or 15 years, even after COD date. So we have seen in under HAME project, a particular percentage, let's say 40% is being paid by NHAI before COD and 60% being spread over 10 years or 15 years, depending on the project. So time of supply would be as per milestone defined in the contract, because continuous supply of services. Department disputing. They're saying, no, COD means completion, commencement date. So you have done the work, you pay up your GST liability, even though milestone is being spread over 10 years or 15 years. Clarity will provide. Circular will come out in this regard. Much needed one. Again, they're saying spectrum, allotment of spectrum to telecommunication cases, telecom companies. The payment of license fee and spectrum usage charges is to be made in installment. Quite obvious. 100 crore pay decided as a total license fee or spectrum charges, but to be paid over a period of time, 10 years or 15 years. Can it be levied? GST can be levied on day one on 100 crore, which is paid over in installment. You will get a clarity. Place of supply of goods supplied to unregistered person, B2C transaction, where delivery address is different from billing address. You must be knowing GST is a destination-based consumption tax. It must accrue to the state where ultimately goods and services are going to be consumed. Over-the-counter sale. And when a person of Delhi going to Mumbai, purchasing over the counter, whether Mumbai, Maharashtra will get SGST component or Delhi will get SGST component, depending on treatment, intrastate or interstate. Big dispute. Section 10, subsection 1, clause CA got introduced from 1st October 2023, but Rule 46 sub-rule E was available since day 1, July 1, 2017. And as per Rule 46 sub-rule E, the supplier must record the delivery, the address of recipient to whom goods are being given. Why it is important? And value was, if it is more than 50,000, must be recorded, so that you can identify the state of that recipient. And accordingly, you can treat the transaction intra and inter. Of course, this concept was mean to satisfy GST destination-based consumption tax. So they are going to have clarification on place of supply. When goods supplied to unregistered person where delivery address is different from the billing address. Coming back to the another clarification which we all are awaiting. Post-supply discount and incentive. So what happened under section 15, subsection 3, clause B? For post-supply discount or incentive, supplier issuing credit note to the recipient, and he gets adjustment of the GST component charge on credit note with his outward tax liability subject to condition. There is agreement prior to supply made, credit note linked to the invoices, and recipient has reversed the credit. Am I right? But whether recipient has reversed the credit or not, how to be checked? There's no mechanism available in the hands of supplier. And this is the disputed point. Here, they're saying they're going to issue a clarification on mechanism for providing evidence by the supplier for compliance of condition of section 15, subsection 3, clause B, Roman 2, in respect of post-sale discount or incentive to the effect that ITC has been reversed by the recipient on said amount, so that supplier can get benefit of adjustment of GST on credit note with its outward tax liability. So lot many. So I've tried my best to make it crisp for all of you. 30 important recommendations by GST Council in the 53rd GST Council meeting. So I've tried my best to present a crisp recommendation. You may have your observation, you may have your feedback, suggestion. Please write back in a comment box, because this particular webinar is watched by not only taxpayer, tax professional, it is being watched by department as well. So if you are writing something in a comment box with your observation, with your say, with your input, where you have some representation, it will go to their eyes as well. And they will watch this one as well. So this is going to help all of us together. I have tried my best. As and when circulars are being issued, I will prepare new videos for you and will come out. And of course, I always say, Sabka Saath, Sabka Vikas. And I must compliment this time GST Council led by Honorable Finance Minister Nirmala Sitharaman ji and all state finance minister for taking a lot of taxpayer-friendly measures. They really deserve big appreciation from the trade, industry, and commerce. Stay tuned. Thanks for watching. Thank you very much.